So Bank of Canada has their policy review meeting tomorrow, and everybody and their mother is calling for a 50 basis point cut. Pretty much that's what expected by the market, a jumbo rate cut as they say. But at this point, does it really matter? We're going to talk about that in this video. Sorry for the interruption, guys. Please, if you like this content and you get any value out of it, please subscribe and like this because it will help my channel a lot. Thank you very much. Enjoy the video. You see, when the economy is struggling, when you have the sixth consecutive quarter of negative GDP growth, when you have 8 out of the 9 previous quarters showing a negative GDP per capita, there is no doubt that the country is in recession. There is no doubt about this, absolutely. Okay. And when you have the unemployment ticking up, okay, we have the highest unemployment official numbers of 6.8% going back all the way to January 2017 outside of the pandemic era. That is telling you that the country is in a dire economic conditions. And all of the jobs that are being created, they are being created in the government sector, public sector. All of them are government jobs. So you have the government expanding and you have the private sector shrinking. The private sector is struggling to create jobs. And this is where it leads to the lack of productivity crisis in Canada. Bank of Canada has been talking about that we have an emergency to deal with the lack of productivity growth in Canada. And that is literally driving towards this economic crisis. And this has been going on for the last 5+ years. Okay. The reason why we are seeing this is coming to the surface now is because the real estate residential investment has been overshadowing this weakness in Canada. For the past, I should say, 5 to 8 years, we have seen an immense growth in the residential real estate segment, mainly because of the cheap money, mainly because of the speculation, mainly because of the immigration influx. The boomers were selling their shit boxes to the new immigrants for millions of dollars. And those immigrants were then speculating on these real estate investment, fighting each other and trying to bid at the prices. Okay. So now the whole speculation element is gone because the investor class who were speculating on these assets is kind of moving away from this investment class now. So we have a lack of investment opportunities in the real estate market, which is of course seeing in the market. Then we have this immigration problem that is also being tackled, which is also putting fuel to the fire. And then we have this huge difference between the household income and the median home price, which is still quite big. And combining all of these things together, showing you that real estate is not an attractive investment anymore. And I haven't mentioned about the higher taxes and tenant issues to mix it with. To summarize, at this point, cutting 50 basis point doesn't really make any difference. Maybe you can have a $30-40 per month savings in your mortgage payment, especially if you are on variable interest rate mortgage. But if you are on a fixed interest rate mortgage, there is no difference whatsoever you're going to have about tomorrow's decision. Why? Because the fixed interest rate mortgages are driven by the bond market. Bank of Canada doesn't influence that. And if you look at the 5-year bond yields, it is hovering around 3%. That means the fixed interest rate mortgages will still be somewhere between 4.5, 5% plus minus. Okay, so that is not changing. So all of this hype about Bank of Canada's decision is not going to make any difference in your life at this point. Maybe a psychological move, but I don't think at this point this is going to make any difference with regards to the real estate market. And don't get me wrong, I'm not calling for a widespread real estate crisis. What I think is going to happen is the pre-construction segment is going to struggle. And this is where a lot of investors are trapped right now. Okay, especially the condo market, absolute disaster. Even the single family home pre-construction segment is also struggling because a lot of those investors who have put their money speculating on the prices are now trapped. But that doesn't mean the existing homeowners are going to dump their primary residences. A lot of bears on Twitter are calling for a widespread residential real estate economic crash. I don't think this is going to happen. The government will provide all sorts of incentives to the residential owners to keep people in their homes. Yes, the investor class is going to struggle, and as a result of that, the investor class will leave this investment category and will not coming back into it. That will actually create a vacuum of investor class in this segment, which is going to bring the prices down a little bit gradually. But that doesn't mean that there will be a mass level of property dump happening across the country. So I just wanted to clarify to all the bears who are calling this scenario a reality, that is very less likely to happen. Anything is possible. There is no certainties, only probabilities. So the probability of having a widespread real estate residential crash is less likely to happen. Yes, pre-construction will struggle, the investor class will struggle, and they will be gone for some time, and they're not coming back to this asset class. Anyway, you let me know what you think about that. Put your comments down below. And if you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. If you are interested in reading about these topics like macroeconomics, financial markets, what's happening with the geopolitical situation, what's happening with interest rate, monetary policy, Federal Reserve, ECB, China, Japan, I cover these topics in a very simple and plain English in a very digestible format. If you like to read about this, there is a link in the description about my newsletter that I send out every week. Do yourself a favor, click subscribe, and enjoy reading. Thank you.